Let me ask you, can people only do a cost segregation study when they buy the building, or can they do it years later? And also, can they do it after a major rehab? And how would that work as well, too?
Both excellent questions. So number one, yes, you can do it retroactively. You do not have to do it in the first year of ownership. You can do retroactive. I mean, if you like yourself, that you just found out about this and you own, X amount of, a bunch of properties, you can now go back and get those tax benefits retroactively, and doing so without amending any tax returns. Okay. And I want to stress this because it's never a good idea to amend your tax returns. It's basically a red light for the IRS to come and audit you. Whereas cost segregation is not any red light whatsoever. Again, we're playing by the rules of the IRS, that are in the Internal Revenue Code. That's what cost segregation is. So doing what we call a look-back study, which we're going retroactively, all that needs to be done is filing a form that is an attachment to your tax return. It's called the 3115 form. And all that does is it's a change of depreciation method. You're basically telling the IRS, I was depreciating it straight line, okay, with a little bit every year. Now I'm doing it in actually the more accurate way, the correct way, because the IRS wants you to take, to identify each individual asset, each property in its proper depreciation life. So doing this retroactively can now get you that 5-year property that we're spreading over 5 years. Let's say you bought a property 5 years ago, okay? You do a cost segregation today, this year you can now get, it's like bonus depreciation in a way, because now you're getting all that 5-year property in this year, in year number 1. So you actually can get bonus depreciation in a sense retroactively if you're looking at a property that you purchased in previous tax year.